Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is going to be for Wednesday, June 26, 2013. We had an up session today with most of the majors kind of recouping some of the losses. We had the ES futures up 15 and the NQs were up 14 on the day. But if you take a look at the relative performance on a percentage basis, you can see that the broad market was much stronger than the NQs. We had a little bit of a bounce in the bonds. I think what that led to was a little bit of a taste for the dividend-paying stocks again, and those of course are mostly found in the broad market. So no surprise there that the broad market outperformed Nasdaq. Internally, the market was pretty strong for sure. Plus 1,800 issues on New York and plus about 1,000 on Nasdaq. So we definitely did to reverse some of that negative internal damage that had been done in the market in the last few sessions. But even as strong as the numbers were today, they weren't nearly as strong as they were weak the last couple of sessions. So we'll get to those in a minute. But let's first turn our attention to the major futures contracts. Let's first take a look at the broad market ES futures. All right, so here's a look at the ES futures. You can see that we basically just didn't really do too much as far as where we were versus the open. We closed just barely above the open on the session, and you can see that we used the static trend line here very, very extensively today. It's where we opened today, settled just a little bit above it. So this static trend line here is definitely in play. To the downside, things that we need to look at for support will be the 2-day low here from 2 days ago, about 1554.5. Resistance now is going to be this 1593 3/4, and then above that right here is going to be the 10 EMA that might come into play tomorrow if they can continue to the upside here. MACD still negative and not terminally oversold by any stretch of the imagination. So this is just probably a little bit of a relief here to the upside. The internals are still negative on balance in a longer perspective. So this is probably something that could be attributed to a little bit of a relief to the upside, and also probably a little posturing for month end and quarter end, which is coming up on Friday. Take a look at the ES futures, the NASDAQ futures now. The NASDAQ futures are a little bit weaker just because they gapped up fairly decently on the day, just a little bit above the high from the previous close, and now we settled down fairly decently below the open. So this is a little bit of a weaker showing here by Nasdaq for sure. Resistance to the upside, if they can get there, is going to be 2890.5. And then above that, the 10 EMA is coming in at 2906. To the downside, this 4/8 level, which was approximately the previous session's low at 2812.50, is going to be a very prominent number. Keep in mind that the 0/8, the 4/8, and the 8/8 numbers are very, very strong Murray math numbers. Just take a quick look here at the cumulative advanced decline line. You can see that we're still negative here. A little bit of a bounce here, but that, as we talked about before, doesn't really kind of arrest the slide here. So we're still in this downward channel that we've been trading in. The Nasdaq side bounced up to this previous lows, and we'll probably find some resistance there in the next couple of sessions. I think the big chart to watch now in the near term is going to be at least as far as internals goes, is going to be the 10-day trend. You can see that we're kind of dead center here of our overbought, oversold threshold. So if we get a reading either way, that's going to have big implications for the market. But right now, the market's got room to move either direction. It is definitely the bias is up in this chart right now. So we're definitely still seeing evidence of risk being taken off the market. But I wouldn't expect that that would prohibit the market from having a little bounce here into the quarter end and month end. And here's the multi-sector daily chart. You can see that we did bounce in all the risk-on asset classes. Pretty good performance today out of all the groups. Even the BTK, which had really kind of been lagging here, and the XAU is still kind of just hovering, trying to stay above water in the basement. And there's one little positive thing that's starting to develop in the Nasdaq patch, and that is the relative strength recently of the SOX. The SOX was really weak for the beginning of the year, but is starting to really started to turn up here a little bit. You can see the relative performance here. This is a long-term weekly chart of the SOX. We broke back above this key breakdown that we had that was really prevalent for all of 2012, right until the end of the year, and we're starting to really see some gains on a relative basis in the semiconductor patch versus the NDX. So definitely, if you're looking for NDX performance, if you're kind of biased that way, definitely keep an eye on the semiconductors. We're starting to see some good relative strength develop, and that's definitely something that we should try and make some money from. All right, so here's a look at our individual sectors ranked from best to worst. You can see this, the SOX was the top gun here, plus 2.5%. The BKX also performed very, very well, outperforming the broad market for sure. Transports finally started coming back on again, and again that's that yield play again coming into effect for the broad market. The XAU is the only major sector that was lower on the day. And you can see that the pharmaceuticals were kind of lagging today as well, which is a little bit surprising since they're yield oriented as well. So I would definitely keep an eye on the pharmaceuticals to see if they're going to either catch up and play the yield game, or to see whether there's really something more in the works here, and if we're going to really see some longer-term divestment out of this group. All right, so here's the SOX again. The SOX does have good relative strength versus the NDX, but I wanted to point out that we do have this seeker exhaustion warning still in place, so this does not bode well for this chart over the longer term. And if we do roll down and start to penetrate the zero line here on the MACD, that's when we should expect to see some better selling develop in this, and some more serious profit taking. And that definitely can happen at any point here. Here's the banking index. Again, MACD is just hovering above the zero line. Had a very strong bounce today. The one thing that this chart has going for it is that it hasn't turned intermediate neutral yet, because it's held above the 50 DMA so far. As far as the gold and silvers go, really didn't do too much. They just kind of leaked down to a new low, just kind of abandoned and not really in play today. The zero line is still the ceiling here on the MACD chart, and if we can ever get back above that, we're going to have one heck of a reversal. And here's a look at the oil futures. The oil futures didn't do too much on the day. They're just kind of hovering around that this 5/8 level, using that as resistance for now. We're still contained, still contained below that 10 EMA that keeps this chart short-term negative. And the gold futures look pretty much like the XAU index, just kind of leaking down and trying to squeeze the last little bit out of this this source of funds here. I'm not sure how much juice there's left, but certainly the 0/8 level at 1250 is going to be very, very key support. Well, so going forward for the rest of the week, definitely keep in mind and operate under the assumption that there's going to be some micro agendas working their way through the markets here as we go into month end and quarter end. Usually the actual marking day, which is going to be Friday, usually is not the strongest day. A lot of times that's actually when you do see some weakness, because the window dressing and whatnot does tend to happen well before that, so that no fingers can be pointed on the actual on the last day. So just keep that in mind when you're going forward with the rest of the week. Well, as always, thanks for listening. This has been Rich for Tradesight.